You guys already know what it is. It is the 29th edition of the Portfolio Review series. Now, this is one of the favorite series that I run on this channel for a multitude of reasons. One, it promotes transparency, something that not a lot of finance channels can do these days. Two, it opens our eyes to different stocks, strategies, and investors. And I've gone over portfolios that are worth $500, and I've gone over portfolios that are worth $5 million. It does not matter the size here on this channel. Once again, if you want to submit your portfolio to be featured in the series, follow my Twitter at Ryan Dengler Show, or join the Discord link in the description and message me from there. Today we're going over Dysectohs portfolio.
Dysectoh, you are an idiot.
And for every time you hear that clip, you either have to smash the like button or take a drink. Alright, roll the intro.
Dysectoh, you are an idiot.
Hello, I like money.
So I'll be completely honest, Dysectohs has one of the most interesting strategies that I've ever seen here on the Portfolio Review series. He shares that he's 20 years old, he's looking to outperform SPY long-term, guided by Seeking Alpha's quant system. He has a boring M1 to use to track the market. This has meant that he has new strategies to beat it, so not VT and chill. And I'll just say this is not the way I'd go. It's really interesting, I'll give you that, and it's going to take a long-term time horizon to see whether he's right or not. He's either going to be a genius or he's going to be stupid. I'll give him this, he could be investing in yield max funds. It could be a lot worse.
Dysectoh, you are an idiot.
He also admits that it's a high-risk portfolio, and he tries to find great stocks at great prices. White columns are his picks, and the orange columns are the Seeking Alpha picks. I'd like to hear more about this Seeking Alpha premium service or whatever. We are not sponsored yet. Speaking of sponsor, this video is sponsored by the Delta Investment Tracker app. Now, if you guys have watched my portfolio review series, you know that I've gone over portfolios on eToro. eToro offers an app called Delta that is the #1 multi-asset investment tracking app. On Delta, you can track crypto, stocks, and even NFTs. This is strictly an investment tracker and not a brokerage. You cannot buy or sell stocks on here. One of my favorite features, though, is the portfolio tracker, where you can track your own portfolio. So when I wake up, I can quickly see the stocks that are in the red that I can buy for the day. I think also the simplicity of the app itself is also something that really impressed me when first looking. The issue with so many other portfolio trackers and stock trackers itself is that it's not graphically appealing, and you have to dig through so much information to really get what you want to find. Another awesome feature is that you can automatically sync your brokerage in too. This adds no additional risk on your part and only makes it easier so you don't have to manually fill in stocks when you buy or sell a new position. Something that really is just appealing for me. I track all my stocks with Delta, and it's just the best dopamine rush whenever you see stocks in the red, so you can buy more amazing businesses at fair prices. You can download Delta for free on the Apple Store or Android Store. Look in the description box for more details. Once again, thank you so much to Delta for sponsoring today's video. As I always say here though, before I go over the holdings and all that good stuff, I like to know the investor's age, objectives of the portfolio, and more. That really gives me more of a fair judgment on the actual holdings itself. Alright, now that we have all that information, let's get on to the holdings. So to start off, we'll go top to bottom, which means higher allocation to lower allocation, and his largest holding, which makes up 22% of the portfolio, is one of his own picks, is Amazon. His average cost per share on Amazon is $139, and he's up 31.95% right now. That's a really good company, and I think Amazon's an awesome business to have as a core holding. Next, making up 9.45% of his portfolio, he owns SMCI. The stock has been on an absolute tear recently, and they just had their first quarter of major free cash flow. Now, I'd like to see a lot more consistency personally if I were to have it be a core holding, but there's a huge bull case to be had. I personally don't know a whole much about this one, so I'm not going to speak on it, but looking at the financials, if they can keep up that free cash flow, it would definitely be interesting, worth researching. And I'll be completely honest here, guys, there are some stocks I just never heard of, and I'm not going to make some comment on behalf of it if I don't know anything about it. I think that's kind of stupid. IIPR, which makes up 8.04% of his portfolio, is his next company. Don't know much about this one. I know a lot about the next one, though, which is Microsoft stock ticker MSFT, which makes up 7.47% of his portfolio. Now, I would love to see you potentially maybe add more to Microsoft. He's currently up 21% on the company. I understand it's trading at all-time highs right now, the whole little AI boom rush, but I think it's such an awesome company for the long term. Microsoft's such an amazing business, looking at their cash flows, dividends, buybacks, and everything about it. I actually just made a video going over Microsoft's gaming segment, and I highly recommend you go check it out if you're interested in Microsoft's gaming segment. Awesome business. I didn't buy it for the AI, I bought it for its awesome cloud business and gaming potential. Next, he owns HITI, which he would not shut up about this week in the Discord and in my comment section.
Dysectoh, you are an idiot.
In all seriousness though, they had an amazing week this week, and they are currently up in his portfolio 24.5%. This is high tide, and I don't know anything about this one except that he keeps telling me to buy it, so I don't like the company whatsoever. It makes up 6.41% of his portfolio though. The next company is Vici Property, stock ticker VICI, and today is Vici Day. And to celebrate Vici Day, I put up a merch discount, so use code Vici for 12% off your order, link in the description. Alright though, on to Vici Properties though, in all seriousness, it's such an awesome company. I think it's really unique for a REIT, considering that they offer amazing yield, but also growth potential as well. I love Vici a lot. I want to have it be a core holding in my portfolio. It is right now. I think I have enough room to add maybe $400 or $500 more into it. If it goes below maybe $28.50, I'll add more. Love Ed Pitoniak so much. Great holding, and I think with interest rates right now being high, I think it could be a great long-term buying opportunity. Next, he owns Moat, which makes up 4.8% of the portfolio. This is a wide mode ETF, and I think it's solid. Next, he owns Meta, which is one of his Seeking Alpha picks, which makes up 4.07% of the portfolio. Meta, I think it's a solid company. In terms of the Magnificent Seven, I think it's one of the lower quality companies. I just personally don't love their business from an outside perspective, and I'm not going to be investing. Honestly, I just think there's better opportunities out there. Instagram has been crashing like every other day too, and that's not a good look for them. Next, he owns CLS, which I don't know much about, but it makes up 2.91% of his portfolio, and it's once again one of his Seeking Alpha quant picks. Next, he owns Ally, which is Ally Financial, which makes up 2.36% of the portfolio. Berkshire Hathaway actually owns Ally. I really like it from a consumer perspective. Financially, I'm a little iffy on it, but I like it from a consumer perspective, and I think if their financials were a little more consistent, I'd be interested. Next, he owns DraftKings, which makes up 2.35% of the portfolio. I love gambling and profiting off of degenerates, so we are bullish on DraftKings here. Next, he owns Berkshire Hathaway, which only makes up 2.11% of his portfolio, and I'd love to see him add more on this. He's up 19.29% on this, and I'd love to see him add more Berkshire. I think that has potential to be a core holding. I'd like to add more Berkshire, but unfortunately, I'm up 100% of the stock right now. On a decline, I'd like to add more. Next, he owns GCT. I don't know much about this one. CAH, RCL, those are two of his quant picks. Then he owns Visa, which makes up only 1.58% of the portfolio. I'd love to see him add this position more. Such an awesome business, and I think long term it's at fair value right now. I'm personally going to be putting the house on Visa if it goes below 270, 260. It's a core holding right now, and I think I have room to maybe add another $1,000 into it. I'm trying to be more conservative with cash, and I have been putting a lot of money into Starbucks recently, but definitely if Visa goes on a bit of a decline, I will be adding more. Next, he owns Mod. I don't know much about this one. Google, which I definitely do like. I like this holding a lot. I'd like to see him add more. I think Google in the 130s, 120s looks pretty attractive to me. I'd have to do more research on the actual business before buying though. OKTA, which makes up 1.48% of the portfolio. Crocs, which makes up 1.34% of the portfolio. Crocs has been on an absolute run recently. Wild to see. A lot of people have fair price on it, like $200, $210, and they've been having a really good couple weeks recently. Still don't love it as a business. There's not a lot of long-term data really supporting its brand value, where compared to a company like Nike, there are decades of history showing that Nike will come out as a premier brand. I'll admit, in the short term, I think recently they've been doing a lot of really good things that I like a lot from a business perspective, but there's just not enough long-term data for me to buy. Then he owns CRM, QTUM, FOR, TWLO, ANF, APP, and I don't know anything about these holdings whatsoever, so I'm not going to make any comment on these. Then he owns VGT, which is a tech index fund. I like this one. Then he owns POWL, TM, and EAT, which owns Chili's. I'll be honest, I wouldn't personally put my money and invest into a stock just because some software says it's a buy. He also has over 30 holdings in the portfolio, and I just think there's a lot of room to consolidate. A lot of those positions are sub 2% of the portfolio, and I personally would just rather have a bunch of core holdings that I'm really highly convicted in and pile my money into those and let the compounding begin. If there's a few holdings I would personally build up in the portfolio, definitely Microsoft, Berkshire Hathaway, and Visa are the big three that I would personally love to build up. Also VGT, or maybe you could add a few other index funds in there. Overall, it's as advertised. I think it's a pretty risky portfolio. I just think it's a little scattered, to be honest, and I think there's a lot more room to trim and become a leaner portfolio. Overall, though, you could be investing in yield max funds still, so you're doing really good.
Dysectoh, you are an idiot.
Thank you to Dysector for sending in his portfolio. I hope he appreciates the transparency and the jokes along the way. And no, I'm not going to buy HITI, but I appreciate you all making it to the video. Once again, if you want to submit your portfolio, do it in the Discord link in the description or on my Twitter at Ryan Dangler Show. Thank you all so much for the support. Smash the like button, subscribe, and do Dividend Stocks Not Drugs. Have a good one.
Dissecto, you are an idiot.